Well, welcome to all who have joined us for this webinar this afternoon or evening, depending on where you are. My name is Michael Swack. I'm the director of the Center for Impact Finance here at the Carsey School of Public Policy at the University of New Hampshire. And just want to tell you a little bit about our master's programs. I know some of you are participants. I direct our master's program in community development. The Carsey School has 3 master's programs. The community development one is fully online and designed for adult practitioners working in community development. We also have a master's of public administration and a master's of public policy. Nick has posted some links on the chat room. If you're interested in any of those programs, you can learn more about them. I'll be monitoring the chat for questions today, so as Eric proceeds, please feel free to post your questions in the chat room and I will follow them and I'll cut in where appropriate and ask Eric these questions. So it's a pleasure today for me to introduce my colleague, Eric Hangen. Eric's a senior research fellow at the Center for Impact Finance. And Eric has many years' experience as a researcher, a consultant, and an educator in the field of community development finance and community development. Currently, Eric is heading a 3-year Department of Energy funded project on bringing clean energy to low-income communities, specifically building solar financing capabilities for community financial institutions. He just finished writing a white paper that will be published next month. At this time, we carry out our Financial Innovations Roundtable with the New York Fed on a similar topic, so you're getting a little bit of a preview today. If you're interested in that, we will also post the registration. I'll post the registration link in the chat for our Financial Innovations Roundtable, which will be open to the public as well. So without further ado, Eric, welcome, and look forward to your presentation.
Okay, thanks everybody. Nice to be here with you. I'm Eric Hangen, and I have actually a little bit of a different presentation prepared for you than what you're going to see in the white paper or at the Financial Innovations Roundtable, which I do hope you will go to. This is the only graph I'm going to show, and it is by far the most boring photograph that I'm going to show. I'm going to try to be a little bit more accessible, but I wanted to just do a little bit of numbers here at the beginning to tell you the big story that solar is growing exponentially in the United States. As you can see on this graph here on the left of the slide, there's enough solar in the country now to power about 20 million homes. And just in the next 5 years alone, we're expected to have enough new solar to power 20 million more homes. And a big part of what's driving that are these big solar farms or utility scale solar projects, they're called, that sort of look like this photograph on the right here, just big fields full of solar panels that these projects, the smallest of them will power 1,000 homes and the biggest of them will power tens of thousands of homes. So that's what's really driving the growth. And those are nice projects. They're really cheap to build. And they reduce greenhouse gases from electricity production. They produce power at a cost that's comparable to fossil fuel-based power. And if you're a utility customer, you get to use some of that power. So you're kind of, everybody's sort of going green if we build a project like that. But if we put social equity concerns front and center, there are actually other kinds of solar projects that are much more impactful from that social justice perspective. So these are the questions here that you'd want to ask about a solar project to understand how beneficial it is from a social justice perspective. And they're also what I'm going to be unpacking and exploring in this presentation. So you'd want to know if somebody's building a solar project, hey, is that energy resilient? Like if a big storm comes by and knocks power out, are we going to have power? Is this going to help you keep power? Is it affordable? Could a low-income family afford the power maybe better than they could afford their regular utility bill? Who's making money off of this? Like, are regular folks, are customers making money off of this and building wealth? Are low-income families making money off of it and building wealth? Or is it mostly big companies and big investors? Who owns it? Can you trust them? Or would they be, is it something that the community could rely on this owner, this partner, to do right by them over the whole life of the project, which could last for several decades? And who's getting jobs out of it? Are we creating jobs for low-income workers? So what I'm going to talk about is really the fact that if you try to build a solar project that scores high on these kinds of social equity benefits, it is much harder to finance than these big cookie cutter utility scale projects. The big projects have all kinds of investors lined up to put money into them, from the big banks and insurance companies and pension funds. But none of those actors are putting money into projects that really deliver on these kinds of questions. So that's what we're going to talk about here for the next hour. But rather than being too wonky about it, because I know I looked at the registration list, and I know there's a bunch of people who know me in the audience. And if you know me, you know that I am pretty wonky. And I wanted to make this a little funner and a little more engaging for Earth Day. So I'm just going to tell stories instead. I'm going to tell two stories, one short one and one longer one, about my personal life and my volunteer work in the social space, because actually I think that will help to illustrate the kinds of challenges that sort of mission-driven solar projects face better than any graph I could show. So first, I'm going to tell you a little bit about me. I am your stereotypical solar panel owner that everybody thinks about when they think about solar panels. My wife and I, my family, we live on a homestead in Vermont, the most progressive state in the country, where we grow all of our own vegetables and drive a hybrid car. And our home is net zero, meaning that we produce as much or actually a little bit more energy than we use. So sort of like the typical image that you might have, right, of the progressive solar panel owner. And for middle-class homeowners with decent credit, like our family, it is really easy to go solar. You just have to call an installer. They'll come out, they'll put panels on your roof, or if you don't like your roof for the panels, put it on your lawn somewhere with a ground mount system. That's super easy to do. Get a home equity loan or a consumer loan to finance your system. Easy peasy. Then when your taxes come due the next year, Uncle Sam will send you a refund of 26% of your project costs. Just a check that you'll get in the mail, a rebate. So which is pretty wonderful. It's like 26% off, right? And if you live in a progressive state like Vermont, it's even easier, because all of the power that our panels produce that we don't use, we get to sell back to the electric utility for the full retail cost of what we pay for electricity. And actually, because it's Vermont and they have to do one better than that, we even sell it for a little bit more than what our retail cost of electricity is. Vermont's the only state in the country that will do that. So that process, by the way, it's called net metering, where you can sort of run your meter backwards. So for us, it was really, really easy to go solar. But for other folks, it's much harder to go solar. And in fact, it turns out that the solar development and financing industry, the way it's structured today, is pretty unfriendly to low-income consumers. And that's driven in part by public policy that is actually regressive, meaning that our policies set up to promote solar benefit the wealthy much, much more than they benefit the poor. So to tell you that story, or to explain that, I have to tell you my second story. So that was my short, quick story. The second story is a longer story, and this time it's about the community where my wife is from. So my wife was born here in Barrio San Salvador, Caguas, Puerto Rico. We lived here together in the 90s. We got married in that little church you see in the background. Our daughter was baptized there. And my mother-in-law was the principal of the little elementary school in the community, which here it is. And I'll just give you a little background about the community. It's a part of Caguas, which is a pretty big city in Puerto Rico, but San Salvador itself is rural and remote. It's really hard to get to. And also, as you can see from the statistics I've put up here, it's high poverty and it's low income. So all of these factors together make it really vulnerable to natural disasters, including natural disasters caused by climate change. So what happened on September 20th, 2017, Hurricane Maria passed directly over San Salvador. That little dotted line is where the eye of the hurricane went, and that is directly overhead of San Salvador. So they got 180-mile-an-hour winds, and about 60 families in the community lost their homes, including one of our family members, just wiped away. But luckily, folks with concrete homes did okay. And most folks have built over the years, have built their own concrete homes to be more resilient to storms. So we were good on that score, except we had to figure out a way to help these 60 families somehow, right? What did not hold up as well to the storm was the power grid. The power grid was not resilient, meaning it could not stand up to the hurricane the same way people's homes did. In San Salvador, every pole and wire, every electric pole, every electric wire was on the ground after that storm passed. But even outside the community, when you got into the city, you see in the top left, big concrete utility poles flattened, and in the lower right, even the transmission system, which brings power from big power plants like coal-fired or gas-fired power plants on one side of the island to the cities on the other side of the island, even transmission infrastructure was damaged. As you all know from reading the paper, where as you read, that people were without power for months and months in Puerto Rico. And in San Salvador, people were without power for about 9 months, which is a really long and difficult time for folks. So I'm going to take a brief detour from my story to just give you context of why the power outages were that long in Puerto Rico. And I have to talk to you about the electric utility in Puerto Rico, which is called PREPA, the Puerto Rico Electric Power Authority. So PREPA was a mismanaged entity. It's a vertically integrated utility, meaning that it owns the power plants, it owns the transmission infrastructure that takes power from the power plants to the cities, and it owns the distribution infrastructure that distributes power around the neighborhoods within cities to individual homes and businesses. Does all of that, owned by the public, but not well managed, and unfortunately really corrupt. And corrupt beyond the whitefish scandal that I'm sure you all read about in the paper. It starts well before then, decades before, when the managers of PREPA bought low-grade fuel oil, but reported to the public that they were actually buying high-grade fuel oil and charged the public for the high-grade fuel oil and pocketed the difference, and other shenanigans like that. And lots of management issues resulting in power plants that are much, much older than they are on average in the United States. Not well located either. Most of them are far from cities and reliant on this big transmission infrastructure to get power to people where they need it. Very dependent on fossil fuels. The utility is very resistant to renewable energy, in part because they make money off of these power plants, right? This is what they've invested their money in. They don't want other people going solar and not buying power from them, right? So that's a problem for many utilities. As a result, electricity is very expensive in Puerto Rico. It's about twice as expensive as it is in the US as a whole. So what happened in 2017, well, before the storm even hit, the economic crisis hit Puerto Rico, and PREPA went bankrupt. It was $9 billion in debt. Today, that utility now is being handed over to a private company. So the utility infrastructure is being privatized, and a company called Luma, which is a joint venture of two investor-owned companies, is taking over. The photograph here you see is just of one of the power plants that PREPA runs during a malfunction, actually after the hurricane. This is during a shutdown in 2019. And temporary outages and temporary malfunctions have been common on the grid to this day. So even though power was restored, let's say to a place like San Salvador, 9-10 months after the storm, even after that, there would be, sudden events happen where maybe power's out for a day or two. So that's the context in which our solar story starts. So getting back to the story, after the storm, my wife and I waited a month actually to just hear from her family that no one had been killed. There was, no phone service, nothing. So we were just, wringing our hands for a month, but we finally heard from my wife's aunt that no one had been killed, but that no one had power, and that the damage had been really extensive. And so they didn't think that they would get power soon, which they were really right about. So we tried to figure out what can we do. So the first thing we did was we raised, we did a fundraising drive where we raised small donations from our church, from other churches, friends and neighbors, just to help people who had lost their homes. We raised $10,000 that we wanted to just give to people who were recovering. We had heard that FEMA had not made it to San Salvador yet, and there was no help coming. So we figured we can at least try to get people some cash. But there was no other way to get the money down to people other than to actually physically fly to Puerto Rico with the cash and hand it to people personally. You couldn't call up a bank and transfer money. So we bought a plane ticket to Puerto Rico. So we have $10,000 in cash and a plane ticket. And we started thinking, well, what else could we do to help people? And we had heard from one of my wife's aunts that she had sleep apnea, and she was desperate to get power back because she wanted to run this machine that would help her breathe at night. And so, you might think, well, she could just run a gas generator, right? But getting gas was next to impossible on the island. Cars are lined up for miles to get gas. And even getting cash to buy gas was next to impossible. You have to line up for blocks at the bank to make a cash withdrawal. And even if you could get gas and could get cash, running a generator is a really expensive way to get power, especially if you're going to run it for months on end. So we called up our friend, shown here in the picture, our solar installer and friend, Bill LaBerge of Grassroots Solar in Vermont, to see if he could design a small solar and storage system that we could take down to the island on the plane. So he did. Here's his little setup, small solar array and an inverter that converts the power to the kind of power your home uses, and a little controller that connects to a battery. And so my wife went down on day after Thanksgiving. I drove my wife to Kennedy Airport with $10,000 in cash stuffed into her sock and a couple duffel bags full of electronics. It is a minor miracle that they let her through security. But she somehow got onto the plane, and here she is down in Puerto Rico unpacking the solar kit. And here it is, set up on her aunt's roof. So when my wife Haiti installed this system, that naturally led to a lot of conversations with neighbors while she was down there. They wanted to go solar too. And a lot of folks were actually interested in something beyond just an emergency kit. They wanted to go completely solar. I mean, they sort of saw the writing on the wall. They said, hey, enough of this PREPA. I'm not ready to go the whole year without solar, with just being able to have a light bulb on. I want to really do it. Although we also did speak with an entrepreneur who started a factory in Caguas that built kits very much like the one that we brought down on the plane, and got a loan from a nonprofit loan fund called Pathstone to grow. And that business has been doing pretty well. So that was exciting. It was great to be able to actually help that company a little bit, make some good connections on the island in the early going. But so we wanted to respond to what Haiti was hearing from the neighbors. They want to help to go solar. So we went back to the churches and neighbors and did a lot of bake sales and had benefit concerts. And these are a couple of the projects that we were able to fund in San Salvador. One of the first things we did was, you see the picture on the left-hand side, was a training for local electricians in the community. So we're from that community, so we knew pretty much everybody there. We knew there was about like a dozen or so electricians. So we managed to make contact with them, and they were all interested in adding solar installation as a part of their business. So we went down you can see Bill there, my friend, went down and we did a training for the electricians. I was the translator, so I learned a lot myself, which is fun. And we put solar up on someone's roof with the money we raised, and then did a training for folks. And the idea was that they would go around and, they would be in the business, right? They learn how to do it. They could go to other folks and say, hey, do you want to go solar? I know how to help you now, since there was a lot of demand, right? Everyone was calling up folks, companies. So we figured this might help. The other project that we managed to raise money for was to put solar and storage on a community center. So about 20 years earlier, I had helped to start a community organization, like a residents association in San Salvador. And the residents had been successful in acquiring a vacant building that they had converted into this community center. And so we raised money to put solar and storage on that building. So it became a place where people could charge their phones, or if they had somebody with, let's say, diabetes, you could keep insulin cold in a refrigerator, just take care of really basic things. That was a bigger project that was more expensive. So it took us a long time to raise the money, which is why you see in the pictures that there's leaves. Leaves had started growing back on the trees by the time we managed to get that project fully funded and built. But it happened. So we knew that folks didn't have cash just to plunk down for a solar system with our electrician friends. So I was connected through Inclusive, the National Federation of Community Development Credit Unions, to a low-income credit union in Caguas called Cooperativa Jesus Obrero. And through them, we reached out and say, hey, would you guys be willing to make loans for people in San Salvador to go solar? And they said, yes, in fact, we already have a loan product for that. They've been making an unsecured consumer loan for people to buy solar panels plus battery storage. And the loan was typically like an 8-year long loan with an interest rate at 5%. They had great experience with it. Despite lending in a lot of low income communities, they'd hardly lost any loans to charge-offs. Like no loans had gone bad is another way of saying that. And they had a real mission around serving low-income communities, which qualified them as what's called a community development finance institution. It's a certification you get from the U.S. Department of Treasury for credit unions, and certain banks and a lot of nonprofit loan funds can get this certification. That is sort of a good housekeeping seal of approval that you are a mission-oriented lender that's out to do social good and primarily are trying to serve communities of color or low-income communities. So they felt like a great partner to work with. And so we told all the electricians, hey, here's a loan product that you can go out and sell along with your solar panels and so go out into San Salvador and go out everywhere else you work and see who you can get to sign up. So it turns out that not many people signed up, which is pretty surprising because everyone was desperate for solar. But the more we thought about it and listened to people when they said, well, I would love to, but the problem that we heard about was affordability. So even with a loan, one of the issues is that a set of solar panels is going to last you 25 years. The battery, maybe not so much, but the solar panel is going to last you a long time. So an 8-year loan is actually a pretty short loan. And you're trying to pay off something that generates economic value for you over a couple decades, just down in 8 years. The issue is it's not going to be cash flow positive for you, right? You're going to spend more on the loan than you would save in electricity costs. So that's one issue. So people started thinking, gee, my monthly payment on this loan, in other words, is a lot higher than my monthly power bill. I was used to paying my power bill, but I don't know that I can pay that extra bit more. That's basically the way people talked about the problem. One of the reasons why it was expensive is because batteries are expensive. And you can't go off grid with solar without a battery. There's no such thing as like just setting up solar panels without a battery and like running your washing machine during the day or something. Even if you wanted to run your washing machine during the day, you got to have a battery as part of that setup, and they cost a ton of money. So that was another problem. So if you want resilience, you got to have batteries. If you want batteries, it's expensive. The next thing is, remember how I told you about how I went solar in Vermont and I got this great like check from Uncle Sam? Well, it turns out if you're low income, you don't get that check from Uncle Sam, because if you're low income, you don't have a tax obligation to claim that credit against. So it's even worse in Puerto Rico. Actually, even if you were high income, you couldn't claim it because Puerto Ricans don't pay federal tax. So there were sort of people in San Salvador were sort of doubly disqualified from getting this tax credit. So for them, basically, solar electricity is 26% more expensive than it is for me, which doesn't really feel right. So the next thing is I talked to you about how in Vermont, we had this great thing where I can sell all of my excess power back to the grid, and I actually sell it to them at this really high price. Like they pay me more per kilowatt hour than I pay them, right? In Puerto Rico, that's not at all the case. It's really difficult to get into, even just sort of transactionally, to get the utility to agree to that arrangement with you. And when you do, they pay you a lot less. And just generally, there's not a lot of subsidies or other supports for solar energy in Puerto Rico, in part because PREPA, which dominated the policy discussions on the island about electricity, didn't want that to happen, right? They wanted to make sure that they could keep funding their infrastructure and paying their debt. And if you think that sounds familiar to other states, that's because that's true. Across the United States, it's sort of a Wild West out there, really, where some states are very supportive. They've kind of, I would say solar energy advocates have won the policy debate. And so there's all these different kinds of supports for going solar that are available. And in other states, it's just much, much harder. So there's some other problems too. Like, if you're a homeowner, even if you own your home, your roof might be shaded. You might not be able to have a good spot to put up a ground mount system, or you might not own your home, right? So those were also limitations to helping people get powered up. So across the island, this story obviously is true for more than just San Salvador. Across the whole island, 2 years after the hurricane passed, there were still fewer than 20,000 Puerto Ricans with access to solar and storage. Despite the fact that people desperately wanted it. So we went back and met with the community to try to come up with new ideas. Here we are. This was in February after the storm. And this is the same community.
Eric, why don't we take a quick break? There are a couple questions that relate primarily to tax policy.
Okay.
Brian DePue, is there a policy change effort underway to make a federal solar tax credit refundable for low-income taxpayers? If so, what organization or organizations are leading that advocacy?
So yes, there is a policy move afoot, and the Biden administration is leading the advocacy for that, which is really great. And we will be talking about. So we'll get to that in a second. Actually, towards the end of the presentation, but that will actually be a big topic of conversation at the Financial Innovations Roundtable. And you can see why, right? From this story. Again, this story is a really good way to explain why policy has to change, probably better than any chart or graph would be. So I hope that's a good answer to that question. But Michael, what else do we have in the hopper before we move on?
A very related question from Lee Barkin, who writes, Wyden introduced the Clean Energy America Act today, which included a 30% investment tax credit extension. Can you comment on this provision? Quote, taxpayers wishing to receive credits must pay wages at not less than local prevailing rates and utilize registered apprenticeship programs. What are the relative pros and cons of tying the ITC to prevailing wage?
Yeah, I mean, that's a good question. There's been a lot of debate on that topic. From the perspective of our story, right? This is a community where you have a $23,000 median household income and a 35% poverty rate, but you also have people who are skilled. and know how to build and know something about electricity and could do this job. And it would be great, right, to be able to support them. It would be great to create quality jobs for people at the same time, right? So really, this is the discussion that we're having here is when you decide to go solar, do you also decide to go solar with social equity front of mind? Or are you just trying to decarbonize and you don't care about what the other social costs or benefits are? And I think that's how I would frame the choice. And there's valid arguments to be made on either side. You can kind of guess that I'm coming at it from the social equity side, though, I guess.
Right. Yep, that's it for now.
Okay. All right, great. So here we are at the community meeting. The community said, hey, we want to control our own energy future. We're done with PREPA. And we have some ideas. So cooperative development has a long history in Puerto Rico. So folks thought about, could we form some kind of cooperative that might help people to go solar somehow? Is there some way we could all, if we all work together, is there some way we could help the whole neighborhood to go solar? So they asked if I could help. I said, sure, let's do it. So we lined up a whole bunch of experts to try to help us. Electrical engineers, financial experts. We got a pro bono law firm, accounting firms, you name it. They came out to help. And we came up with an idea, something like this. And this looks like a pretty busy graph, but if I showed you the real chart of how complicated it is, it would be vastly more complicated. This is a really gross oversimplification. But the idea is we would set up an entity that would own solar panels and batteries all over the neighborhood. And that would be sort of controlled by the community organization. But there was a way that we could get that 26% tax credit money that I was just talking about. There's a way that we could get that money into the project. And that involves setting up another corporation that was a limited liability corporation, actually based in Delaware, with a big, long legal agreement to it, that could sell tax credits to investors in the mainland US who had a tax appetite and wanted to make money by buying tax credits. So we figured we could set up this LLC to try to then go out and market the tax credits to investors. And on the other side, this project entity would raise debt from banks or from other community development finance institutions, which we thought would be great since this was a mission-driven project. It would be great to have a mission-driven lender in. And then that project entity would turn around and sell power, right? It would go out and install solar panels and batteries in people's homes and sell them the power, and people in turn would pay the project entity back for that power. And of course, the project entity would have to contract with all kinds of people to install the stuff, to operate it and maintain it, to service accounts with the customers, make sure everyone was paying their bill, all that kind of stuff. And then we were going to imagine that people could still keep their home connected to PREPA, because it's really hard to design a solar project and storage system that meets 100% of everybody's needs at all times. You could just build a system that kind of gets the basics for people, but not like every single kilowatt that they need. So this is the idea that we came up with in sort of really short overview. But what I want to just emphasize is that there's huge transaction costs involved in setting something like this up. I mean, we had a top tax law firm from Washington, D.C., like they would usually charge hundreds of dollars an hour working on this. Luckily, they were doing it pro bono. Hundreds of pages of different legal agreements to form all the different entities. There's a few other entities that are needed that I didn't even talk about because it would get too complicated to talk about it. You have to figure out all the state regulations how could you, what would they allow you to do, what they wouldn't allow you to do, what does the consumer contract have to look like? So there are some nonprofit business models in the US that in the mainland US that look like this. And there are some for-profit providers, even in Puerto Rico, that do this, but they tend to charge higher costs than much higher costs that per kilowatt hour that not many people can afford. So we were kind of on our own here. We had to figure this all out without a partner. There wasn't anybody. We talked to a lot of people in the U.S. doing stuff like this. There was not anybody who was willing to come to Puerto Rico and come to this little neighborhood and plunge into the waters of Puerto Rico to try to make it happen with all the regulatory uncertainty and all the other issues. So it took us a couple of years to figure this out, including a lot of time working with community members to get their input on what they were willing to accept and educate them about their options. Pretty much everybody worked pro bono. I ended up giving a year, the equivalent of a year of my salary at UNH to try to help make it happen. And the sad part is, at the end of the day, we actually found an investor who was willing to put in some tax credit equity, a couple $1 million worth even. But the community ended up being split on whether they could accept it or not. And to understand why, you really have to think about, you really have to put yourself in their shoes. That they were sort of saying to me, Eric, you're telling me that there's this investor based in the US who's going to become part owner of our little project here in San Salvador. And because the investors obviously, concerned about their risk, right? They don't want this project to go belly up. Basically, if the project goes belly up and stops working, they actually have to pay back their whole investment to the Treasury. They lose the tax credit to U.S. Treasury. So they're at a lot of risk, and they want to make sure that they can control the project if it starts to go bad. So there's language in these contracts saying that, hey, they can step in and manage the project if the community can't manage it, if they start faltering. So that's really scary to people, right? Imagine that you're living in an island where hedge funds and vulture funds have just bought up your government's debt and are now telling your government what they can and can't do. That didn't sound like something, very appealing to a lot of people. So it was frustrating for us, having worked that hard and that long on trying to put this deal together, only to have it fall apart over those concerns. But it's also understandable. And so it was literally right down the middle. Half of the community said, "Hey, we need power now. We'd be willing to work with an investor like that, and we're gonna work on something that would do this." And the other literally the other half of the community saying, "Nope, we can't do that. We gotta, even if it takes us forever to build this project, we won't do it that way." The folks who said, "Hey, we would be interested in finding an investor," they came back to me and said, "Is there any way you can help us?" Because basically, I had to tell the community, "Look, with you divided like this, we're not going to raise a dime, right? I just can't help you anymore. You have to figure this out." So nothing happened for a long while, and then some folks called me up from the community and said, "Listen, there's a bunch of us who think it wouldn't be so bad to accept this investment. And we know that investor is not interested anymore. But is there anyone you could connect us with who's thinking along the same lines you could help us with?" And it turns out there was. So there's a nonprofit startup that I had been in contact with, that a bunch of other folks thinking along the same lines. It was called Barrio Electrico, or Electric Neighborhood. And it was a nonprofit that wanted to bring solar power and storage to low-income rural communities all across Puerto Rico. So I called them up and said, they're a startup, right? Just a couple of people working, again, like we were, for no wage, just trying to make this happen. But I said, "Listen, would you be willing to make San Salvador one of your pilot sites, one of your first pilot sites? And the little bit of money that we've managed to raise from bake sales and concerts and stuff, I'll give it all to you guys if you think you can make this work." So they started working with the community, and they've limited progress so far. They've been able to help about 12 homes with just small grants. They're still looking for the big tax credit equity investor and the debt to build it. But just to tell you a little bit about their business model, their idea is that they're going to be a nonprofit who they've got sort of engineers and lawyers and folks working pro bono for them. And their idea is, hey, we'll it's sort of similar to the graph I showed earlier. We'll put solar panels and batteries in people's homes, and they can lease them for us at an affordable monthly payment that's going to be less than their power bill was. That's our promise, is you're going to save at least a little bit of money, as in addition to getting resilient, reliable electricity that you can count on. So, so that's the sort of line at the bottom here between Barrio Electrico and the member customers. And then we're also going to work with a community partner. So with community leaders in every neighborhood we go to, and we'll train and educate those community leaders about everything that we're doing, how the solar systems work, how we're financing it, what the policy context is, and they will help us in turn outreach to their community to find people who want to become member customers, to educate them about how you can go solar and how it's affordable, what your options are, help people who are owners, check their systems before every hurricane system to make sure that they'll be set up. And the idea was also to set up a little sort of reserve fund that if a household that gets into trouble, somebody gets sick or something, they can't make one of their monthly payments, that there's like a little reserve fund to help, to just sort of help people out. So, trying to be community friendly, right? So another thing that they did, speaking of Lee Barkin's question that they committed to, was training local folks to help work on the installations. And actually one of the volunteer members of Barrio Electrico runs a training program for women to become solar installers. So that's the business model. So it's great. I hope that somebody on this call will want to invest in them. You can give me an email if you do, but I'll tell you why I think they've had such a hard time getting investment, because they've gotten very little of it to date. So here's the whole litany of reasons why. The first set of barriers to financing a solar project like this is just the financing barriers itself. First of all, you've got the transaction costs, and we talked about that, right? Law firms, accounting firms, investor relations, huge spreadsheets, hundreds of pages of legal agreements, all because you have to monetize this tax credit. You can't use it yourself. You have to find a wealthy person or wealthy company to want to invest in it. Next thing is that most of those wealthy people or companies aren't interested in these kinds of projects. Why? Because they'd rather place their money in a big utility scale project, and it's easy to see the appeal to them, right? You can place a couple $1 million right away. So all those costs of all those lawyers and accountants are spread over an enormous project serving thousands and thousands of customers. And the end customer for a utility scale project is a utility. So that's a company you're used to underwriting. Whereas Barrio Electrico's end customers are low-income households, right? So that's tough to think about. How do we finance that? To boot, we've got a fly-by-night nonprofit, right, as our sponsor. They're the people trying to do this. And lastly, that fly-by-night nonprofit needs long-term debt, right? They're going to try to borrow for 20 years, right? That's the kind of permanent financing they need to fund their project. But the kinds of mission-driven funders who would like to fund this kind of project don't often have access to that kind of money. So that makes it hard for them to do the deal. The next thing is that we're trying to make the power affordable for people. So the tax credit isn't enough, right? When you're talking about a low-income family in Puerto Rico and we need to get them batteries to boot, you need more subsidy than just the tax credit to make it happen. And then lastly, there's the needs of community engagement. I talked about all the time we spent, just hours and hours and hours on end with community members doing outreach, education, organizing. This was an event where folks came around and like a group of resident volunteers came around to evaluate roofs to see, who had a good roof for solar and could it work for them, and educate the homeowner about their options and stuff. All of that takes a lot of time and takes money, and very few people want to fund it. Lastly, there's political opposition and regulatory barriers. So we talked about that. And many states wouldn't even allow a project like Barrio Electrico to exist. And how Barrio Electrico has to operate in Puerto Rico is really constrained by the kinds of regulations that are in place. So let's go back to those questions that we've posed at the beginning of the presentation. About a good solar project. Is the energy resilient? Is it affordable? Who gets to build wealth from it? Who owns it? Can you trust them? Does it create quality jobs? So I call this the Puerto Rico test, that if a good solar project that's really promoting social equity, if it you get a good answer to all those questions, I would call it as something that passes the Puerto Rico test. It's actually something that would be meaningful in a context like Puerto Rico. The problem is that our solar energy development and financing system just doesn't pass the Puerto Rico test right now. There aren't enough developers who are willing to go out and try to build that kind of project. And there isn't enough money on the investor side flowing into those kinds of projects. It's just too hard to do right now. So having lived in Puerto Rico and kind of being adopted into my wife's Puerto Rican family, I've always been told that Puerto Rico is very unique. So imagine my surprise when, for our UNH research project funded by the Department of Energy, I went out and I interviewed about 50 other mission-driven solar developers and finance providers across the United States. And you know what? They talked about the exact same kinds of challenges all across the country. So it's really the US in general doesn't have an energy development and financing system that passes the Puerto Rico tests. When any low-income community steps forward and says, we want to provide power for ourselves, we want it to be resilient to storms, we need it to be affordable, we want to be able to save money and build wealth by controlling our own energy future and not have our hard-earned money siphoned off by a corrupt utility or a rich investor, and we wanted to create jobs for our community, what does our financing and development and regulatory system say back? It says, sorry, we can't help you. You're on your own. So is Puerto Rico the exception? I don't think so. Because not only does it fail the Puerto Rico test, we failed the California test, right? We saw that with the wildfires. We saw it with the PG&E bankruptcy. It fails the Texas test. We saw it during Harvey. We saw it during the freeze up. We saw it during the $5,000 monthly utility bills that people got. We saw it during the Hurricane Sandy test. Puerto Rico's problems are really not that unique. And it turns out, actually, it's even tough to do a good community-driven solar project in New Hampshire. As part of our research, we interviewed groups who are working to help resident-owned manufactured housing parks to go solar. And we learned that in several instances, the residents of those parks actually declined to use tax credit equity because the transaction costs and developer fees that were associated with doing so actually were going to make it solar more expensive for them than the alternative. So again, we have this really highly regressive system of supporting solar that really only works for the wealthy. So here's just a quick overview of the project that we're working on, and we'll go right to questions after this. We have three big parts to our project. We are training community-based lenders in how to do solar finance that can benefit low and moderate income communities. We are convening folks, so that's our upcoming Financial Innovations Roundtable that I hope you'll go to on May 19. Where we're bringing together mission-driven developers, lenders, investors, and policymakers around how to make solar finance more equitable. And then lastly, we're developing platforms to make it easier for mission-driven lenders to raise and deploy capital to low-income solar projects. So we're really proud to be working with several great partners on this. Just looking at the bottom of your screen, we have Bright Community Capital and its parent corporation, Coastal Enterprises, which are both community development finance institutions. Inclusive Prosperity Capital, which is a spinoff of the Connecticut Green Bank, and Inclusive, which I've mentioned earlier, the National Association of Community Development Credit Unions, of which Cooperativa Jesus Obrero is a member, for example. So just I guess sort of the one slide infomercial for the May 19 event, I think some of the issues that we're going to be talking about during that event include, how can community development financial institutions and green banks work together to create a financing environment that better supports mission-driven solar projects? Can we get that solar investment tax credit to be refundable, as has been proposed in some recent legislation, or even get a grant in lieu, which would be better still? There's legislation out there to create what's called the Clean Energy and Sustainability Accelerator, which would provide $27 billion of financing towards renewable energy and climate resilience. Within that bill, 40% of it is supposed to go to what they call climate impacted communities. But currently, the language around what gets to count as a climate impacted community is frankly so watered down that I really doubt that communities like San Salvador will ever be able to benefit from it. I think it will go to other wealthier communities that are better positioned. So I think that's a concern. So the design of that legislation will be a topic. credit enhancements to enable mission-driven lenders to do more in this space, engaging federal agencies, foundations, and major banks in how they can help support systems change. And then lastly, lowering the regulatory barriers that we've talked about at the state level. So I think all of those, we're going to have, I think, a pretty robust dialogue and debate with a lot of different perspectives during the event on the 19th.
Eric, so the link to register for that is in the chat, so you should take a look at that. And there are a couple questions, Eric.
Great.
The first is from Chris Kelly. When pitching the benefits to solar homeowners, are you or Barrio Electrico touching on the environmental benefits at all, or is it wholly focused on financial savings and resilience?
Yeah, actually, it's really interesting. People in San Salvador are very much attuned to the environmental benefits as well. And they do feel like, I think there's nothing like being on the short side of the stick during a natural disaster to turn you into an environmentalist. And I remember hearing about this a lot when I was working in New Orleans after Katrina hit too. A lot of community development folks would say, hey, we're hardcore environmentalists now because we know what's at stake. So that is part of the, I guess I would say, the value proposition for people. But they're in a position where it has to be resilient and it has to be affordable as well.
Yeah. Eric, is there a secondary market for these tax credits similar to historic tax credits? That's a question from Jeff Gallery.
So there's a very robust investment market in tax credits that like large banks are the biggest investors. And I don't know whether they subsequently sell them to others or not, but there's a very sophisticated financial system out there that exists to buy these credits. So it is usually big corporations, actually more so than it is individuals when you're talking about a commercial project.
All right. Another question from Lee Barkin, Eric, what is the logic behind a 15% reduction in the tax credit if direct pay is elected?
Oh, thank you, Lee. Yeah, he's like, I'll pay you later. I don't see any logic to it. And it's just yet another example of to me, it's just regressive policy. I don't think it makes any sense. We have a public subsidy here, right? The tax credit is, you have to understand that a tax credit, I teach economics at UNH. And to me, a tax credit is a public expenditure the same way any other public program is. So why are you, requiring that some investor has to make money off of this? You're just delivering a public subsidy. So deliver it directly to the project and don't put a haircut on it.
Yeah. Let me see if there are other questions. I think that's it. Yeah, feel free to post any other questions that you have, or we're winding this down now. And
yeah, another thing I'll say actually is just because I did, looking at the list of folks who are on the webinar, I think there's a number of folks who work for mission-driven lenders or community development finance institutions. And so if you're interested in getting involved, go to our training page. If you're interested in taking a course, we have a great course on consumer solar, sort of rooftop solar for low-income homeowners. And then we also have a course where you can learn about how you would think about financing solar panels on multifamily, commercial projects like solar on multifamily buildings, or for community solar projects, which you haven't talked a whole lot about, or groups like Barrio Electrico even.
Right. And if you look again in the chat room, we have links to the website for the Center for Impact Finance, which also has the link to those training programs. And also to let people know that this presentation will be available on the event website by Thursday or Friday if you want to see it. And there's the link in the chat room to be able to reach that as well.
Yeah. Michael, I see two more in the Q&A that just came in.
Yeah, and let me get to those now. What is the most effective role of philanthropy and foundations to provide grant or investment dollars? That's from James Cutler.
Yeah, I think that's a great question about sort of where can their money be most useful. And one of the things that I think is illustrative from this story that holds true. I mean, if I told you a story about a community controlled solar project in Minnesota, you would see a lot of parallels. And one of the things I would point out is how how much work goes in on the front end to work with community members to evaluate feasibility, to find the investors, to design the project. And when you're talking about sort of, a nonprofit that's trying to do this work, they might not be able to bankroll that very easily. So I would really encourage foundations to think about helping with that really early stage at risk kind of money, with just grants to those kinds of nonprofits, and then leave that grant in the project as part of the quote unquote sponsor equity. I think that's probably the number one role I would pick. So I see Gerardo's question here too. How do low income consumers get access to solar? And then later he asked, what % of low income consumers have solar? That last question is difficult for me to answer, but there is a disparity in the percentage, like by income, in terms of how whether low income consumers have access. So in the U.S., it is this often they either get access to solar sort of passively because they happen to be a utility customer and that utility has built a utility scale project, right? But they don't benefit along any of those other sort of social equity metrics that we just talked about. So for projects that deliver those kinds of social equity metrics, you have there's a wonderful, small but growing and very committed industry of mission-driven solar developers out there who are trying to do this work. And I know that there are actually a lot of community development people on this call, including some folks who I know have commented to me in conversation in the past about that you're worried about the graying of the community development field and how are we going to replace all the folks like Michael Swack when they retire. And my answer to that is there's a tremendous amount of great young minds working in energy equity. And so they're trying to build community solar projects where folks can buy a share of sort of like a cooperative, sort of the same way you get a share of a community supported agriculture that would deliver fresh vegetables to your doorstep. You can buy a share in a community solar project that delivers renewable power to your doorstep. There are folks out there building solar installations on multifamily affordable housing. There is a mature version of Barrio Electrico called Posigen in a couple of states of the United States that provides solar on low-income homeowners' rooftops at an affordable price. But all of those groups, they face, or at least did face in their younger years, the same kinds of financing barriers, the exact same kinds of financing barriers. So Pam, I see, has a question about resident-owned communities. Actually, there have been a few resident-owned communities who have been able to go solar, and I don't know, Michael, I don't know who you would direct them to, but they have had some success. It's just the irony is that they've been able to have that success sort of with one hand tied behind their back because they haven't been able to use the tax credit, but they've been able to finance it other ways. But they're paying more for power than they should have if the tax credit had been made more equitably available.
Yeah, I mean, essentially what we're finding is it's similar to other community solar that's got none, which is that it requires a subsidy. So the resident-owned community in New Hampshire and Lebanon received a grant from the state that was combined with some other financing. But the thing that made it actually workable was the fact that there was this subsidy from the government that enabled, that covered, as Eric suggested, many of the transaction costs related to the deal.
Great, thanks, Michael. So it looks like we've handled all the questions. So this is our contact information here on this slide for folks who want to follow up with us. Oh, we do have one last question. Which states have probably the best policies? There's a great website called Community Power Scorecard that actually gives each state like an A to F grade on how good they are on that. And you can also go to a database called Desire, D-S-I-R-E, no first E in Desire, D-S-I-R-E. And that has this really detailed database of state policies regarding both efficiency and renewables. So that's those are good places to look to get information about your state or find the best state or that kind of stuff.
Great. Well, Eric, thanks very much for sharing your expertise today. Again, if people have follow-up questions that they didn't have an opportunity to ask, feel free to contact us. We have our email address is here. And again, if you want to take one last look in the chat before we sign off, we have a number of links to this webinar and to other sites at the Center for Impact Finance, some of the information we talked about. So we invite you to cut and paste that or save it in any way you can. And again, we've also posted how you can get back to this if you would like to see parts of this again or refer it to any of your colleagues. So thanks very much for joining us today. We appreciate it.
Thank you all. Take care.